This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets and the SPY for July 10th, 2025. And with that said, let's go ahead and jump straight into the data. It will pull up. There we go. All right, so let's see. I actually want to pull up yesterday's. So we had the 10-year auction today. It came in slightly lower. We were expecting, either between the 4.2 to the 4.3%, so it kind of hit right in there. The Atlanta Fed GDP now came in at a 2.6%, so nothing too wild there. I didn't read the FOMC minutes, but I didn't really hear anything out of the woodwork for there being anything new in there. So one thing I do want to focus on though is the crude oil inventories. This is actually one of the highest levels it's been in quite a while. So I'm just gonna swap my screen over really quick. But I wanted to show you all this really quick because let's see if you guys can see that. Yeah. So generally this doesn't, get up to that high. That means we actually have a ton of oil stockpiled. Um we have not had that level since I want to say February 2nd, February 5th. That was the previous time we had it that high. And then, going back in history, it's obviously been higher than this, but this is kind of an outlier, over the past basically year and a half. Um, besides when we had that very large print in February 5th, we haven't had this high of a level since almost last January, last February, February 2024. So um, oil prices will be moving down a little bit. Use that knowledge, how you will. But yeah, I just wanted to show that. Now, tomorrow's kind of the big data day for the week, even though it doesn't really have a whole lot of data, but this is just kind of the most data we have for the week. So, in the pre-market, we have the continued and initial jobless claims. The forecast has that, essentially basically the same levels. Very likely we're going to see that pull upward though, just because, the data sets have been all cooling down quite a bit. So the jobless claims moving upward means that the economy is cooling down. So very likely those come in a little bit hotter. 30-year bond auction that will pull down. I don't know exactly what percentage yield they'll come in, but very likely it'll be around the 4.7 uh, you know, percent, whatever the extra decimals are. Now, Fed Waller is speaking at 115. If the jobless claims and the bond auction don't move the market, then potentially Fed Waller speaking at 115 or Fed member Daly speaking at 230. Um, what else? We had a bunch of the tariff data hit today, and I don't have a whole list of it pulled up right now, but basically there was a bunch of countries that got their tariff rate uh, sent out. Some are between 20%, some are between 50%. So they're kind of all over the board, and um, we just kind of have to wait for the market to price that out. So far, it doesn't seem very drastic, but we'll see. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And going over the technical analysis, as always, let's go ahead and discuss our moving averages and our Bollinger Band, because potentially we could be pushing up to the upper Bollinger again. So, okay, the market closed at 624.06, so it's higher close than yesterday, obviously. We had the 5 mile pull up to 622.17. So with today's close, that's very, very, very likely going to be around 623. That means the upper bounds of the 5 mile is going to be around 625. Not quite at the upper Bollinger yet, but it's nearing there again. And with the 5 mile basically going to be around that 623 range, that means the lower bounds of the 5 mile is going to be around the 621 range. Um, just make sure you write down on open the upper bounds 5 mile itself and the lower bounds of the 5 mile. Now we are having the moving averages continuing to pull up. We do have the market looking like it might do an upper Bollinger move again, which if it does, then that will be that 630 range that I discussed a few weeks back. Um, Basically the top of that channel will be around the 634. So, if the dealers actually go for that move, then potentially we're going to be moving all the way up to the 634. So, if you're in bear positions, that means take some hedge calls because potentially there is some premium to capture there. Now, the 10 mile is at 618.03. It's very likely going to be around the 619 tomorrow. That means the upper bounds of it will be around the 621, which that coincides very, very well with where our 5 mile lower bounds will be. So potentially we can go all the way from the upper bounds of the 5 mile all the way through the 5 mile itself to the lower bounds of the 5 mile, which is the upper bounds of the 10 mile. And we can travel all the way through the upper bounds of the 10 mile, through the 10 mile itself, to the lower bounds of the 10 mile, which that'd be around 617. Okay, so if we're going to have some crazy sell off tomorrow, just follow the moving averages and, that'll kind of guide you through where it's going to go. Now, we did have a quote unquote bullish close because we did close above the 5 mile. We closed below the 5 mile yesterday. So what we see here is essentially we tested the lower bounds of the 5 mile yesterday. We tested the upper bounds of the 5 mile today, and both of these days were very chop heavy. So what that means is that now we kind of have the liquidity to move. Um, If the market wants to really push this, they definitely can. If they want to do the support pullback that I'm anticipating, then it's kind of time for that now. Okay. Um, what else do I want to cover on the daily chart? So we did see a little bit of buying today. The ADL went up slightly. I believe Nvidia also hit a all-time high today. And let's see what else. I was going to mention something, but I don't remember what right now. So I've been monitoring the volatility on the VIX, which is, the BVIX for the symbol. This has still been very elevated, even though it's been kind of up and down. But as long as it's hovering around this 90 to 92 range, then that means that, you know, dealers are somewhat positioning for the downside. We saw it pull up all the way to 96 today. That kind of really suggests that potentially the selling is really starting to get ready to kick off, but it didn't hold that level. So we are seeing this kind of turn upward again. Just be prepared that if this heads up to that 96, 97, 98 range, then this can really trigger the VIX itself to pull back upward, and that would trigger a lot of selling within the SPY. Now, I don't have the charts and everything pulled up on my desktop, so I kind of don't want to go over it, but I do. Um, the gamma and the IV has been very, very strange over the last few days, and I don't want to say strange, that's kind of the wrong word, but I just want to say it's been showing different signals. Now, when we're in a bull market and we're heading upward, so just grabbing the daily chart. What happens for the dealers is that they're not just seeing buy orders come in and then filling those orders. Okay. What they're doing is they're seeing the interest in the calls start to pick up. Okay. And as we're traveling upward and upward and upward, more and more levels of these calls are seeing that interest stack up. And that's how these dealers know to buy shares into the market, which helps push that price up. But the buying is to kind of hedge the upside. And the upside is that potentially there's a ton of calls. People are starting to get interested in the calls at these new levels, and that's how the market continues to push. Okay, so unlike retail, a dealer will be buying shares to hedge the sale of the call. It's not like retail where we sell a call at the top of a bullish structure or at a top of a bearish structure, for example, to capture a bearish move. For the dealer, they'll be selling the call premium. They see the call premium being able to be sold there, and they will buy shares to hedge that upside, and that just helps drive the price up. Now, on the opposite side, they need to see the gamma, which is, it's not the same as the interest, but in how I'm explaining it, it's going to be kind of the interest of the buyers or the sellers. They're starting to see what's becoming what the interest is, not so much the calls anymore. So over the last, 3 to 4 trading sessions, we've really been tapering within the same range because they're seeing the calls, they're seeing the puts, but they're not seeing enough calls. Okay, so they're selling calls at this level, but they're no longer able to capture a ton of premium on selling the calls. It's tapered. Now, as a dealer, they're no longer having to buy shares to hedge the calls being sold on the upside because there's not enough interest up here yet. Okay. Now, they're starting to buy puts or starting to fill orders on puts, and they're starting to sell shares to hedge the downside. Okay, so hedging the downside for a dealer means that they're going to sell puts into the actual selling itself, and they will sell shares to offset selling the put. Okay, it just works a little bit differently than how a retail trader would sell the options. Now, with that said, we're starting to see that change of no longer just buying shares and selling calls. We're starting to see that they're positioning for the downside. They're starting to see the gamma stack up on the downside, and they're starting to sell shares into the market. They're not fully doing that yet because if they were, then we'd be seeing the VIX, pulling upward. We're not seeing that yet. When we do see the selling, the VIX is going to be pushing up to, basically the 2021 mark very, very quickly. It's going to look like one of these type of candles where, it's just a very quick move up to that level. Um, what else? So we do know that dealers are starting to position for the downside. Now, does that mean that they're going to push the downside yet? No, that doesn't mean that. Potentially, again, they can continue pushing towards the upper Bollinger if they want to. Now, structurally, um, this head and shoulders didn't fully play out. Hold on, my daughter ran in here. Anyway, okay, so this head and shoulders obviously doesn't look like a head and shoulders right now. We did have this move upward, so potentially this can start being broken out of. Now, it's not fully broken out of yet. We do still have some strength in this head and shoulders, but we do need to start being prepared that this can, again, turn into that cup. And I mentioned this in last night's video. I am going to delete this head and shoulders temporarily, but that's kind of what we need to look for. However, this can still turn bullish or bearish, I mean. This can be a micro head and shoulders right here. Doesn't look like it, but it really can be. If we get the liquidity to push downward, that can allow a inverse cup to the downside, and that can allow some more of the structure to finish out for the bears. Sorry, I'm losing my train of thought there for a second. So what I'm looking for is essentially we tested the lower bounds of the 5 mile during yesterday's session. Today's session, we tested the upper bounds. Now, for tomorrow's session, we need to see whether we break out of that level or, head down. Okay. I don't think this is going to continue chopping. If it is going to continue chopping, then what's going to happen is that essentially we're going to take the top of this cup area, which is that 626.28 range. We're going to start building some form of bear structure and then head down right back to that, 623-ish, 624 range, which for, the structure of the day, that's going to look like chop. Okay, it's going to look like hitting that level, pulling down and chopping until we get some form of breakout. I don't think we're going to head back upward, but again, just be prepared. If we do, then you know what to look for. It's that 626.28 range. Start forming some form of bear structure from there, create a rejection, and then if we're going to continue heading upward, we will form a handle and head upward. Now, many people think that this is a cup right here and forming a handle downward. I don't think it is. The reason why is because this did not overshoot at all, and it didn't even hit the original level. So even though it looks like it did, on the daily chart or on the actual just um, chart itself, it's about 30 cents off. And for me, that's kind of a big deal. The 30 cents means that the cup really didn't complete. So for me, I don't consider this a completed cup, but if the market does, because it doesn't really matter what I think, if the market does think this is a completed cup, then we need to look for this to form a handle, and you know, potentially that's a small cup right there. That's going to form a small handle downward and head upward. Okay. Um, yeah, we kind of know what we're looking for, whether we're going to continue heading upward or, break downward like I anticipate. Uh, we do know what to look for at this point. We know, to look for the daily 5 mile as well and see if the structure is going to, reject that 5 mile and head downward, or if we're going to use it as a major support and continue heading upward towards that upper Bollinger. But we did break away from the upper Bollinger. We did have our, pretty solid 5 mile test. Now we just need to see what the market's going to do with that. Now, I know many people are in put positions because I am, because that's how I trade the upper Bollinger every single time. Uh, Everybody just needs to be continuing hedging TQQQ. I said that wrong. TQQQ calls. Okay. What I've been doing is I've been buying TQQQ calls almost every single time we dip down because I just have a massive amount of puts right now that are dated out for August and September. So all I need to do is just capture this premium on the bullish push. Okay, if this is going to continue melting upward, then I'm going to continue stacking puts on that upper Bollinger. However, that also means that I can't ignore my call side either. And a lot of people are starting to do that. Can't be doing that. Today alone, we had a low of 620 something. I was able to buy a TQQQ call during the 621-ish range, and so far that's up right now. Even though the overnight's down, but at least if we continue heading upward, those calls are going to allow me to have more premium to continue fueling my puts and to not have my account be blown up. Uh, so that's how you trade that. Don't just continue stacking puts if you don't have the funds for it. You need to capture some of this upside if we're going to continue upward. Because again, if we're going to continue upward, we have a full $10 right here. We're essentially going to be going to that 630, 634 range if we head upward right now. So, that's a ton of premium to still capture on the upside. Use it to your advantage. Don't just waste it away and continue loading into puts. Now, if you've been buying puts at the levels that I have been, which basically started at the 613 range, 612, 613 range, if I remember correctly, majority of your puts are going to be very red right now. I know basically every single put I have is red. Um, what I'm doing is I'm just continue slowly adding to those positions, slowly adding to the actual bear shares. So like the volatility stuff, the inverse, uh, uh, semiconductors, inverse tech. I've just been slowly adding to those positions because when the downside does happen, and it will. It's not like we're going to continue running forever. That's not how the market works. We do get our support tests eventually. Then those are all going to massively light up because we're already buying them at an absolute premium. Um, the puts sold in this level are very, very, very low IV, and you can buy them very, very cheap. Okay, you can buy them months out, very, very cheap, and you can slowly keep adding to them. So that's what I'm going to keep doing. And I know for some people that's very hard to do, but that is how you trade this range. Um, so yeah, with that said, I'm going to end the video here. I hope everyone has a good evening, a good day, and I will talk to you tomorrow. Trade safe, and yeah, let's have a great rest of our week. We have 2 more trading days, not a lot of data, and a whole lot of tariff data that still needs to be absorbed by the market and everything else. So yeah, I'll talk to you all tomorrow. Have a good night.